Hi, now we are going to look at Subtopic 3.3, Journalizing Process. Previously, you've learned about the accounting cycle. For this session, we are going to focus at the second stage in the accounting cycle. First, let's look at the term of journal. What does it mean? According to Horngren's Accounting 10th edition, the term journal means a record of transactions in date order. How about the term journalizing? It means the process of recording transactions in a journal, or in the order words, recording a journal entry. Next, we're going to talk about special journals. Brief introduction will be given for special journals. Then we're going to list out the special journals and talk about when we would use them and how they look like. Special journals are for recurring similar type transactions. The formats or designs for special journals usually depends on each business. It means the number of columns, column headings, and so on depends on what is best suited for each business. The most likely special journals are sales, cash receipts, purchases, and cash payments. However, a business could add more special journals for other recurring transactions. Our discussion only consists of 4 special journals along with the general journal. The 4 categories of special journals are sales journal, purchases journal, cash receipts journal, cash payments journal. Now, let's look at sales journal. We use sales journal to record all sales of merchandise on credit. This is the format of sales journal. We record date of transaction in the first column. Then, we would write the name of debtors in the second column, which is account debited column. For the third column, we record the given credit terms to our debtors. For example, the figure 2 means 2% of cash discount would be given to the debtor if payment is made within discount period. The figure 10 indicates discount period. Cash discount would given only if debtor makes payment within discount period of 10 days. The figure 30 indicates credit maturity period. For this example, full payment must be made within 30 days of the invoice date. The last column is to record the corresponding amount of the transaction. And lastly, we would sum up the amount of transactions at the end of the month. The total on 31st of March is 27,000. Next, let's look at purchases journal. We use purchases journal to record all purchases of merchandise on credit. This is the format of purchases journal. Similar to sales journal, we record date of transaction in the first column. Then, we would write the name of creditors in the second column, which is account credited column. Similar to sales journal, for the third column, we record the given credit terms to our creditors. The last column is to record the corresponding amount of the transaction. And lastly, we would sum up the amount of transactions at the end of the month. Now, let's look at cash receipts journal. It is used to record all receipts by cash and checks. At the first column, we are going to record the date of transaction. Then, in the account credited column, we would write the title or name of the account that is credited in ledger as a result of cash inflow. In cash column, the amount of cash received is entered, while in bank column, the amount of check received is entered. In the sales discount column, we record the amount of sales discount given to debtors or customers. And lastly, we would sum up the amount of transactions at the end of the month. Next, we will look at the format of cash payments journal. It is used to record all payments by cash and checks. At the first column, we are going to record the date of transaction. Then, in the account debited column, we would write the title or name of the account that is debited in ledger as a result of cash outflow. In cash column, the amount of cash paid is entered, while in bank column, the amount of check paid is entered. In the purchases discount column, we record the amount of purchases discount that is given by creditors or suppliers. And lastly, we would sum up the amount of transactions at the end of the month. Next, we will talk about general journal. A general journal can be used to record any transactions. However, the use of only a general journal for all transactions is more costly and is not an efficient tool for control purposes. For an effective internal control procedure and to reduce costs, Transactions are organized into similar type groups called special journals. Thus, a business can use special journals along with the general journal. General journal is the book to record transactions that cannot go into any of the special journals. Examples of transactions that are recorded in general journal are non-cash capital contribution, drawings of goods, sales of fixed assets on account, purchase of assets on account, sales return and allowances or return inwards, purchases return and allowances or return outwards, adjusting entries, closing entries, correcting entries. This is the format of general journal. Corresponding to it, each journal entry is going to show a transaction date. Next, we will write the accounts that were affected in the column of account titles and explanations. There will be at least 2 accounts that are involved in each transaction. This is because, according to double entry, every journal entry would have at least 1 debit and at least 1 credit. Sometimes, it'll be 2 debits and 1 credit or 1 debit 2 credits, etc. After that, narration or explanation will be written in bracket to describe the transaction. The corresponding amount for each of those transactions will be recorded in the last to 2 column, which is debit and credit column.